We've got less than 2 weeks to go in 2025, and that means the clock is ticking to make certain financial moves. From retirement accounts to health insurance to tax strategies, December 31st is a hard deadline, and there are some smart financial moves you can make now to set you up for success in 2026. Drew Kliber is a partner at Wilde Wealth Management Group. Drew, thanks for coming in today.
Thank you for having me.
We're so glad you're here. First of all, let's start with retirement, 401ks and IRAs. What should people be doing now in the next 2 weeks?
Well, December 31st is a hard stop on a lot of the financial benefits you have. So I would definitely make sure on the 401ks that you are maxed out, or you have maxed out what you can afford to max out before December 31st, for sure.
And so that means adjusting, if necessary, your contribution amounts, or making additional contributions if you can.
Correct. I would talk to your human resources person at your company to make sure if there's anything you can do, if you are still a little bit light on the maximums, to maximize your contributions.
Love that. Okay, so how about switching gears to the health insurance side of things? FSAs, flexible spending accounts. What do you recommend there?
Well, definitely, a lot of them have a use it or lose it.
Right.
I believe on the FSAs, you can roll over $660 from 2025 to 2026. Double check with your employer to make sure that that is the case for that particular plan. But, go out, get the pair of prescription glasses you need. If you have more than $660, make sure you use it somehow before December 31st.
Yeah. And the list of things you can use it on and not use it on is a little bit counterintuitive sometimes. It's not fully what you would anticipate, so sometimes you can use the FSA money on things that you wouldn't maybe expect.
Correct, yeah. Your employer will have a brochure through your plan that will literally guide you through everything that you need and you can and can't take as a FSA kind of deduction, I guess.
Yeah. Okay, so talk to us about something called tax loss harvesting. Translate that into English.
Tax loss harvesting is what you do if you need to capture losses. So you don't capture them until you've sold the investment vehicle. So for example, if you bought a stock at 100 and it's now at 50, you have a $50 loss, but you don't get to realize that loss until you sell it.
Right.
So if you have a tax problem coming up, you can harvest that $50 loss in that scenario and either use it for this year, or if you have a lot of losses, you can carry forward for the next few years.
Got it. And so you want to sort of strategize if you have a big tax bill or a small tax bill. Maybe you want to take those losses now to offset things and that kind of thing. Okay,
Absolutely.
That makes sense. What about, on the topic of investments, what do you recommend in terms of people rebalancing or manually adjusting their investments this time of year?
Well, you got to be careful with that one. So in a 401k or an IRA where it's non-taxable, yeah, I would think you can kind of rebalance it, kind of sell your winners and hand off to your losers, so to say. If it's a taxable account, be very, very careful, because if you rebalance and sell your winners, you're going to incur that tax problem, which you want to avoid this time of year.
Right. How about on insurance, health insurance, folks, beneficiaries? It's coming to the end of the year. What do you recommend there?
Oh, always check your beneficiaries, whether it's a 401k, your health insurance, anything that you have, because you can get married, divorced, you have kids.
Right.
You want to make sure your primary beneficiary is up to date, and then your contingent beneficiaries are all up to date. And you have percentages on all those contingents to make sure that you're giving it to who you need to give it to.
So, I mean, it sounds like there's a lot of things folks need to think about in the last couple of weeks, and it sounds like folks should make a checklist, right?
Absolutely. The closer you get to the year end, make sure you have a plan. Have your checklist. Try to help yourself out for 2026. Check a couple of those off, especially your 401k contributions that you can make in 2026. Kind of get your plan in place. Make the holidays a little bit more special and less you got to worry about in 2026.
I know. Get that stress out now. Get it out of the way. Drew Kliber with Wilde Wealth Management, thank you so much for being here.
Oh, thank you for having me. I appreciate it.
Yeah, we got more information at AZ.